I've been using trading robots for 17 years. Not the new Neo robot, and definitely not those companion robots. I use trading robots to actually grow my trading accounts. And today, I'm sharing the exact 5-step process I use in 2026. Now, I don't promise or guarantee anyone results, but if you want to learn how to build your own robot, or just want to see what actually works for someone who's been doing this for almost 2 decades, smash the like button, subscribe to the channel, and let's start with step 1. Step 1 is simple, but it's where almost everyone goes wrong. You have to build the strategy manually first. Now, my strategy, it's already tested, the open range breakout, and traders have used this since the 1930s, originally coming from pit traders, watching the opening auction, and there's even a complete academic paper showing the viability of this trading strategy. Let me just show you. So at 9:30 a.m. Eastern every single day, I'm watching the first 3 candles that are being formed on the 5-minute time frame. You could see here that creates my opening range for the day. Why does that matter? Because that's the New York Stock Exchange open. So this creates my opening range that I'm watching. Then I'm simply waiting for the price to break above or below. You could see we've had no break above and no break below, but that's going to give me my direction. So you could see at this point right here, we finally get a candle break above and close. This tells me I'm going to be looking for buys today. It's helping me with that overall market direction in this trading session. Then I'm simply waiting for a pullback on this one. I like this level right here, so I waited for that pullback. Price tapped in, shot up immediately, and smashed my take profit. Now the orb isn't always that clean, but we can add things to our robots like an EMA, so we only trade when price is above this level, or maybe we only place a trade when there's a demand zone. Now don't worry, I'll show you some live trades my robot actually took later in the video, as well as some verified trading results. But now let's get into step 2, which is backtesting, but not the way that most traders do it. Backtesting is great for validating ideas and understanding how a strategy works in different market conditions. But here's the truth, backtests are never perfect. For example, let's look at this backtest right here. This is probably what you normally see. Look, a gain of 68.14% a month, a drawdown of just 5%, but this is not realistic. It's curve fitted. And what I mean by that is this, what you're looking at right here, doesn't even have a strategy. It's just been performed to fit past historical trading data. So it's just been over optimized to fit the exact history of the markets. This doesn't work. And even though it looks good, this would likely blow your account in a very short order. Now, let me show you one of mine. What? 2.16% per month, a drawdown of 34%, and this is actually 15 years, so it's also a much longer time frame, which makes it harder to not blow an account unless you have an actual good trading strategy. Now, you may say, hey, 2% is not enough, but if you look at this and you understand that Warren Buffett only does 1.5% a month, 2% is more than enough. And the bottom line is it's more realistic, and the more realistic the backtest is, the more likely you're actually going to get a trading result in your robot. I also have a 5-year backtest right here, which is a little bit higher risk. I was going for 5.5% per month, and this is still showing pretty good results, even though it's higher risk. And this is attached to a live trading account right here, which I will get into a little bit later in the video. But first, I want to get into step 3. The third step for using trading robots in 2026 is having a hybrid execution model. We already have a strategy already, that's the orb, but we want to execute those positions for steady gains. For this, I like to average into trading positions. As you can see on the chart right here, my robot opened a buy position, it went against me, it then opened another buy position, another buy position, and then as the price retraced, the bottom 2 positions end up in profit, and as you can see, the account here is in profit using this strategy. Here is a more severe example, something you see in indices a lot, big candles like these. So we had the buy position, it went against us a few times, but then again, you could see the market retraced, and we still ended up in profit on that position by continually averaging into the trade. Let me explain a bit further. All right, so you can see here we have our range, right? You know, I'm using that orb trading strategy, and then we're waiting for the price, right? So on this one, price broke out of the range right here and closed. So we are looking for buy opportunities. Now, I'm generally waiting for a pullback, so I probably would enter the trading position somewhere around here. But as the trade goes against me, you could see I'd enter the trade again here, another buy, and it comes down. And I'd probably enter another buy trade right here. And then when the price eventually comes back up, I would exit the trade right here. So this position would be break even. This position would be a win, and this position would be a win. So even though my original entry was wrong, we averaged into the trading position, we didn't take a loss, and we ended up in profit. If I go to my robot here in MetaTrader and I scroll down, I have this section labeled grid. So what I'm doing is I'm increasing the volume a little bit on every single position, and I'm increasing the distance of the next position. I open a little bit on every single position as well. And then in order to minimize the drawdown, I make sure that we only trade if there are no other open positions. This is what keeps this from a death grid to what I consider a safe grid. Now, the robot has only been on the market for 3 weeks, and we already have 3 updates available. And in my 4th update, I'm going to be adding a new feature that's going to have a manual entry model. So you could trade the orb yourself, but if your entry is wrong, the robot will automatically manage your trade and open more positions if it goes against you, exactly how I was showing earlier. So if you entered your trade right there and then price went against you, it'll open again, and when price finally retraces, we will exit right here, break even, win. Now, some of you probably think that's risky. That's why you need filters, which brings us to step 4. Now, in order for my hybrid execution model and my trading robot to consistently be profitable over time, I need to have the right filters. I want to have a news filter, a moving average filter, and then at least have the option for a supply and demand and support and resistance filters if I really want to tighten things up. So if I go back into the robot right here, you can see we have a bunch of those filters right here. I'm going to go through them, but we also have that news filter, which is incredibly important. I like to filter the high impact news right here. This is basically the red folder news events, your CPI, your PPI, your unemployment claims. Now, these news events are what move the market in one direction very quickly, which is what we're avoiding because we want to stay in the range. You will frequently see the market is trading normally and then news hits and it goes boom, right? And that's what you want to avoid because when we're stacking into our trades, we don't want to go in one direction. So the news filter helps us avoid that drawdown. We simply don't trade 60 minutes before news, don't trade 60 minutes after news, and that isn't even shown in the back tests I showed you earlier because the news filter doesn't work in back testing. Then we also have an EMA. Look, you could put the EMA filter on 200, and if we go back to our trade example here, look, we broke out the top of the orb. I said I was going to enter at the bottom of the range right here, but look, at that moment, the price was below the EMA, and if the filter was on, it won't take the trade. Or let's say we're using the support and resistance. Well, then the robot is going to look to enter at support and resistance levels. Look, there's a strong level of support here, so the robot would enter at this level right here, and that's a great level for a trade. Or if we had the supply and demand filter on, the robot will look for at least 3 or 4 green candles in a row. We don't have that, right? We just have 2 green candles in a row right here, so there is no valid demand, so there is no trade. So it would have avoided the trading position altogether. Now, obviously, this is going to give you less trades, but it's going to keep you more profitable. And if you want to see how well I'm doing with my robot, the Trade with Pat robot, stick around for step 5. But before I show you those results, if you're wondering where I trade, it's with the AAA FX brokerage. It's the best broker in the business. The spreads are low, commissions are low, registration is free. So click the link in the description right now and let's look at some live trades. Step 5 in my process for how I'm using trading robots in 2026 is the live results and managing those accounts. So I've got over 10 accounts running my robot. I have 5 of those accounts available for you on the Trade with Pat website. You can click on those right there to take take a look yourself. Now, if we go into the Discord, you could see people are posting their results every single day here. The link to the Discord is in the description, and here is one of those trading accounts from one of the Discord members, a member of the Trade with Pat Robot. And you can see he's doing quite well so far, looking at a 1.5% per month gain and a drawdown of just 0.13%, slow and steady. And if we look at my accounts, it's very similar. You can see track record and trading privileges both verified. This is an AUD CAD here. This is one of my favorites. You can see we are pushing up right here. The worst drawdown we've had is 3.5%. We're doing about 1.21% per month. So I can increase the risk here and get some bigger gains, but I'm just starting slow, giving every single account some trading room. Same thing here on my S&P 500 account. We did have a larger drawdown on this one already, so we do have to be careful with the indices. I prefer the Forex pairs more myself, but you could see we are still looking good so far here. And our Great Britain pound Japanese yen is also doing very, very well. Very steady, up to about 3.51%, 1.1% per month, and a drawdown of 0.45%. So on this one, I could probably increase the risk. And that's all I'm doing as I'm managing these accounts. I'm looking at which accounts are performing and what I should be doing with the drawdown. You can see this EURUSD account had trades on the 17th, 18th, 19th, 20th, 21st, 24th, 25th. So it's been busy. 4.26% per month, 1.5% drawdown. So again, over time, I'm going to increase and decrease the risk based on that drawdown number. And I'm always updating the software. So if I like something or I don't like something, I adjust it. And then every single week, you've been getting an update so far. If you're interested in joining the software, come to the website, Trade with Pat, click join now. I have the Black Friday coupon on right now. You could just come right here, put Black Friday in the coupon section, click apply, and join us today. Now, that is how I'm using robots in 2026. I hope you'll join me and over 300 members already in the first couple of weeks. If not, I'll see you on stream. Like the video, subscribe, watch this video. Definitely watch this video, and I'll be back next week. Much love.